Good morning, dear friends. We were discussing the cost of asset to the previous owner. We were discussing that concept, and we just wanted to learn it with an example of an HUF, which I just told you earlier also. Now we'll just try to go deep in that concept of cost of asset to the previous owner, because this is very, very important. In terms of subsection 1 of section 49, if the capital asset is acquired by the SSC by way of a gift or a will or inheritance or succession or on partition of HUF or under the scheme of amalgamation or demerger or on the distribution of assets on the liquidation of the company, or in the case of amalgamation of a banking company like that, it means these are the circumstances. If an SSC he acquires a capital asset, means that acquisition of the asset may be by way of a gift, will, inheritance, succession, etc. If that is so, it means if a particular SSC comes under the transactions of covered under subsection 1 of section 49, then in that case the cost of acquisition of the asset shall be deemed to be the cost for which the previous owner of the property acquired it. This is very, very important thing. For example, if a particular SSC X, he has got some capital asset, say building. He has got some capital asset, say building, as a gift from his father on a particular year, say in 2004, by way of a gift. It means once he has got this building by way of a gift, it means that he did not pay any consideration out of it. So if such situations are covered, then the cost of acquisition, means the cost of acquisition in the hands of SSC shall be deemed to the cost for which the previous owner, in this case the previous owner was his father. So the cost of asset to the previous owner, that shall be deemed to be the cost in his hands. So this is a very, very important provision which says, I'll just repeat it again. If the capital asset is acquired by the SSC by way of any of these modes, the modes may be the gift, will, inheritance, succession or partition of HUF that we just discussed in our previous discussion with an example, or under the scheme of amalgamation or demerger or the distribution of assets or the liquidation of a company or something like that, the scheme of amalgamation of a banking company with a banking institution which has been sanctioned by the central government. If the acquisition has been acquired by the SSC by any of these modes, then these three things are very, very important. Then the cost of acquisition of the asset shall be deemed to be the cost for which the previous owner of the property acquired it. Number 2, this amount shall be increased by the cost of improvement. That means whatever amount has been incurred for the improvement of these assets, and this improvement may be borne by the previous owner or by the SSC himself. It means to that extent it would be increased, means the acquisition cost would be increased. And the third thing is, for the purpose of calculating the long-term capital asset or the short-term capital asset, the period of holding by the SSC shall also be counted, because this is very, very important for computation of incidence of tax. Because the long-term, if we talk of long-term capital asset, then we are just dealing with the computation of long-term capital gain. And if we are just talking about the short-term capital asset, because whether asset is a long-term capital asset or a short-term capital asset, that depends upon the period of holding which is held by the SSC. So for the purpose of calculating the long-term capital asset or the short-term capital asset, the period of holding by the SSC shall also be counted. So these three things are very, very important. If the acquisition of the asset has been acquired by the SSC by any of the modes which we have discussed, we'll just try to understand this particular concept with an example. Only then I think that would be more clear to you. Example is that Mr. X purchased a house on 1st April 1998 for rupees 10 lakhs. So Mr. S, he purchased the house on 1st April 98 for 10 lakhs. On 10th March 2002, this house is gifted by him to his son R It means he was the owner of the house and he purchased the house on 1st April 1998, and this particular house was gifted by Mr. S to his son Mr. R on 10th March 2002 on the occasion of his marriage, and on 15th of March 2007 Mr. R sold this house for 25 lakhs. On 15th of March 2007 Mr. R sold this house for 25 lakhs and the selling expenses have been rupees 1 lakh. Compute the capital gain. So if you kindly see the question, if you kindly read the question carefully, the house was purchased by Mr. S and he purchased this S on 1st of April 1998, or I can say during the year 98-99, that was the previous year during which he purchased the house, and on the occasion of the marriage of his son R, he had gifted this house on 10th of March 2002 without any consideration. It means the gift was there, and this house was sold by Mr. R, his son, on 15th of March 2007 for 25 lakhs. So in this case, the cost of acquisition in the hands of Mr. R shall be the cost of acquisition in the hands of the previous owner, that is Mr. S. So in this case, how would you calculate the capital gain? That we just try to solve it. Means the sales consideration is 25 lakhs. Selling expenses, which are to the extent of 1 lakh. So the net sale consideration is 24 lakhs. Now, since Mr. R, he acquired the house on 10th of March 2002 and he has sold the house on 15th of March 2007, it means a period of 36 months has already passed. So, will be required to calculate the long-term capital gain. When we talk of long-term capital gain, then everything has to be evaluated in terms of index cost of acquisition or the index cost of improvement. So, in this case, we will be calculating the index cost of acquisition in the hands of Mr. R. First of all, we will have to see the cost of acquisition. The cost of acquisition would be, the cost of acquisition shall be the cost in the hands of the previous owner, that is rupees 10 lakhs. So that is the cost of acquisition. Now if you want to calculate the index cost of acquisition, index cost of acquisition would be 10 lakhs into the index for 2006-2007 divided by the index for 2001, because he just sold the house during the previous year 2006-2007, so we will be taking the index for 2006-2007 as a numerator, and the denominator would be the index for 2001-2002, because on 10th of March he acquired the house as a gift from his father. So based on that, we can calculate the index cost of acquisition, and this index cost of acquisition shall be deducted from the sale consideration, and the balance shall be the capital gain in the hands of Mr. R, and on this capital gain he will have to pay the capital gain tax. So this is the way we can calculate the capital gain when a particular assessee acquires the house by any of the modes which have been prescribed under subsection 1 of section 49 of the Act. Now the next item the next thing which we want to clear is the assets which are acquired before 1st April 1991 or on 1st of April 1991. This concept is very, very important, because seeks to cover all those transactions where an assessee has got the capital assets before 1st April 1981, because this is a very, very relevant concept in computation of capital gain under this head. So, where the capital asset became the property of the assessee before April 1, 1981, or where the capital asset became the property of the assessee by any mode means the mode which we have just discussed, by any mode referred to in section 49, and the capital asset became the property of the previous owner owner before 1st April 1981. So these two situations are there. The first situation is where the capital asset became the property of the assessee before 1st April 1981, or where the capital asset became the property of the assessee by any mode which he acquired the property by any of the 9 modes which we have just discussed, and that particular capital property, the capital asset became the property of the previous owner before 1st April 1981. Then, if either of these two conditions are fulfilled, then the assessee may take at his option. What are those options? He can take either the actual cost or the fair market value of the asset as on 1st April 1981. It means if a person, for example, if an assessee has acquired the property in 1978, say for rupees 5 lakhs. So an assessee has acquired the property in 1978 for 5 lakhs, but on the 1st of April 1981, the market value of the property was say 8 lakhs. Now this is up to the assessee, so he can choose either of these two values for the purpose of computation of his capital gain. Obviously, when a person wants to choose, when option is there, he will choose this particular option, means market value of the property as on 1st of April 1981. Certainly the capital gain tax would be lesser in this case. So this option is given to the assessee. It means the provision is very clear that when the capital asset became the property of the assessee before 1st April 1981, or where the capital asset became the property of the assessee by any mode referred to in section 49, and the capital asset became the property of the previous owner before 1st April 1981, then he may take at his option either actual cost or the market value of the asset as on 1st April 1981. We just try to understand. I will understand this particular provision with the illustration. For example, in this case, if you kindly see, suppose X purchases preference shares on April 30th, 1978 at the rate of rupees 50 per share, and the fair market value of the preference share as on 1st April 1981 is rupees 80 per share. If he sells the share in 2007-2008 at the rate of rupees 200 per share, it means he has an option to take the value of the share as on 1st April 1981 as rupees 50 or rupees 80 to calculate his capital gain. It means the option is given. So he can either take rupees 50 or rupees 80. If he opts for rupees 50, naturally he will have to pay more capital gain. The capital gain in this case would be, means, for example, he has sold the share for rupees 200, and if he takes the cost of acquisition as 50 rupees, it means he will have to pay the capital gain of 150 rupees. Whereas if he opts to have the cost of acquisition as of 1st April 1981, which is rupees 80, then in this case the capital gain shall be less. So naturally he will opt for the higher value which exists on 1st of April 1981. But this provision is not applicable in the case of depreciable assets. It means if the capital asset is a depreciable asset, then this option is not available, or this particular provision is not available to the assessee. But in this case, the following point should also be duly considered. This is also very, very important. What are those points? The points are the advance money. If the assessee has received any advance money and the same has been forfeited by the assessee, then it shall be deducted from the cost of it. It means if some advance money has been received by the assessee and it has been forfeited by him on account of some reason, then this particular amount shall be deducted from the cost of acquisition of the capital asset. That we'll just try to learn with an example. Another thing is, if the previous owner has received and forfeited the advance money, then it shall not be deducted. It means if previous owner, not the assessee, the previous owner, if he has received and forfeited the advance money, then it shall not stand deducted from the cost of acquisition. And the third is that there is no difference between advance and other money received and forfeited by the assessee. It means the law is very clear that if an assessee has got any advance money and this advance money has been forfeited by him on account of some reason, then it shall stand deducted from the cost of acquisition. And number 2, if the previous owner has received and forfeited the advance money, then it shall not be deducted, and for the purpose of advance and other money, there shall not stand any difference between these two. We'll just try to learn this particular concept with an example. Say, Mr. S purchased one building on 1st October 1982 for rupees 5 lakhs. He entered into an agreement on 1st October 1987 to sell this building for rupees 8,70,000. It means purchase was made on, he purchased the building on 1st October 1982 for 5 lakhs. He entered an agreement on 1st October 1987 to sell this building for rupees 8,75,000 and advance money of rupees 25,000 was received. But subsequently, buyer backed out and the advance money of rupees 25,000 was forfeited by Mr. S. This building was sold on 1st January 2007 to some other person for rupees 45 lakhs. So in this case, how do we calculate the capital gain? We'll just try to understand this. First of all, the sale consideration is say 45 lakhs less the cost of sale, that is nil. Selling expenses, they are nil. So the net consideration is 45 lakhs. This is the net consideration. Now we'll be calculating the capital gain, long-term capital gain, because this is a long-term capital asset. The long-term capital gain can be calculated by assessing. First of all, we'll have to calculate the index cost of acquisition. In this case, for the purpose of index cost of acquisition, we will first determine what is the cost of acquisition. The cost of acquisition shall be what? He bought the house on 1st October 1982. It means this house has been purchased subsequent to 1st April 1981. So the cost of acquisition would be 5 lakhs. Since some amount of 25,000 was received when he wanted to sell the building on October 1987, and this amount was forfeited by him. So in this case, we will just deduct rupees 25,000 which was forfeited by him. So the cost of acquisition in this case shall be 4,75,000, and accordingly on this cost of acquisition we shall be determining the index cost of acquisition, which would be equal to the index of 2006-2007 divided by the index cost of 1982-83. So this would be the index cost of acquisition, which will be deducted from the net sale consideration. The balance would be treated as the capital gain in his hands, and it would be taxable. So this is the way we can calculate the capital gain in respect of the asset. Now we'll try to learn the computation of capital gain in certain special cases that we'll be doing in the subsequent discussions, in the subsequent lecture. What are those cases? The cases are when there is a conversion of capital asset into a stock in trade. Number 2, the transfer of capital asset to the firm as a capital contribution, means when you just want to become the partner in a partnership firm and you want to contribute the capital. Instead of contributing the capital, you are just contributing the capital asset. Then how would we calculate the capital gain? The next case is the transfer of capital asset by a firm on its dissolution or on its liquidation. When the firm is going to be liquidated and the capital assets are distributed by the firm to the assessee, then how would we calculate it? So the next case can be the transfer of capital asset by way of compulsory acquisition. That can be a case where the capital asset of the assessee has been acquired by the government of India on account of several reasons. This capital asset may be a building, maybe shop, or agricultural land, something like that. So how would we calculate the capital gain? The capital gain in the case of non-resident, when a person, when the assessee happens to be non-resident, and the capital gain on the transfer of bonus shares, when you get the bonus shares and you just sell it, or you transfer the bonus shares, how that capital gain would be calculated, and the capital gain on the transfer of right shares and the conversion of debentures into shares. So these are some of the cases. We'll just try to calculate the capital gain in our subsequent discussions. So that's all for today. Thank you very much.